Welcome to the Rope Trading Communities video, and this video is about the Wyckoff Schematics. So if you're talking about what is Wyckoff Schematics, well, this is a particular phases of the market where Richard Wyckoff has observed in the stock markets actually. So he has created it within the volume spread analysis series, and that's something that I'm going to explain you guys. And especially this will be helpful for swing traders out there, not for intraday traders out there, but definitely it's going to be helpful a lot for swing traders, because obviously we have to accept the reality that there are two types of traders. One is the intraday traders and one is the swing traders. Intraday traders are those people who have time from 9 to 3. They can sit in the markets, they can take trades in terms of futures, options, nifty. It could be anything within the markets. They can go for a scalping. Any single thing can be possible within intraday trading. But for the people out there who have a job, who have a business to take care, who doesn't have enough time to spend on Indian markets or any markets out there, for them this particular schematics can be really useful, and this is for you guys. So now let's get started with the series. First, you have to understand what is Wyckoff schematics, by the way. Wyckoff schematic is nothing but it's a different phases of the market where we try to buy a accumulation phase or we try to sell on a distribution phase. So there are four phases in the markets as explained right here within the Wyckoff logic chart right here, or a diagram as you can see. There's a four market phases. One is the accumulation, right? One is the accumulation, one is the markup phase, a distribution, a markdown phase, and there are two more things. You can call it as a redistribution and a reaccumulation phase, and so on, right? So in simple, let me just say accumulation, reaccumulation, distribution, and redistribution phase. These are the four phases of the market. But when it comes to trading using Wyckoff schematics, we only trade usually on accumulation distribution phase. Yes, you can trade on the redistribution phases also, or a reaccumulation phases also, but usually the smart money will focus on the low. So they want to acquire more points, they want to capture more points in the markets. So they would look for a fresh trend out there. Before starting the trend, they would like to buy the markets on the cheapest price as soon as possible. But in this particular video, we'll be focusing on the accumulation part. Okay, so in this video, we'll be focusing on the accumulation part. This is the part we're going to focus on, where we will be understanding what are the different phases of Wyckoff schematics, and then based on that, how to recognize it in terms of stocks or anything out there. Stocks, forex, cryptocurrency, it could be anything. That completely depends upon you. Now, what are the different phases of Wyckoff schematics is something that you have to understand. So different phase, there are 5 phases in Wyckoff schematics. Okay, so phase A starts from stopping the trend. Phase B starts from creating the cause, and phase C and phase D is usually for testing for supply and demand and knockout weak holders, and phase E is all about defining a new trend. I know that you didn't understand this, but you're going to understand this with the chart right now. So this is the Wyckoff accumulation schematics. So what is the accumulation schematic? In simple, as I explained previously, we are going to buy at the bottom, right? When there's a downtrend, okay, once there is a downtrend right here, so market is coming down right here, and obviously market came down, and this is the accumulation phase, and market is in a sideways market right here. So a lot of traders out there, they don't know how to recognize these particular phases, and based on that, they don't want to take any risk out there. So we as a price action traders or any beginner traders out there, they say the trend is your friend, trade with the trend and so on. No, that's not how things work. Just because there is a trend doesn't mean that you have to trade. You have to trade in every market situation. That makes you a good trader. Now, in this particular accumulation phase where market is on the lower lows, that's where we're going to focus on the Wyckoff accumulation schematics. So now, as explained, there are 5 phases from phase A, phase B, phase C, phase D, and phase E, right? There are 5 phases, and it starts from phase A right now. So what are the different phases within the phase A? What things that happens in the market? That's something I'm going to explain it one by one. So right now, what's happening right here? Phase A, it is about stopping the trend right here. So what's happening? Market is coming down right here. Okay, market is coming down. It means that sellers are getting exhausted right here. So sellers are getting exhausted in the sense supply is getting reduced right here. That's what the overall phase of the markets. Now, preliminary support. So every single time market is going down right here, a preliminary support every single time that it is stopping the trend. So in simple as I can say is I'm going to show you in with an example right here. So let's assume that market is going down right here, and slowly the markets or as you can say, slowly the market trend is being stopped right here. So the particular distance between the lower lows is getting reduced right here. This is the lower lows, right? So market is getting lower lows, and the distance between the lower lows, the distance between lower lows is getting shorter every single time. So that's called the shortening of drag. Okay, that's what we prefer. Actually, we prefer calling it shortening of drag, where market is stopping its trend. So once it is done, the first phase of the phase A is about selling climax. So what is a selling climax? Selling climax is not just a pattern, it can be recognized as a phase of the market. Okay, so now what you can see right here is market is coming down, and it might create a selling climax at this particular phase, or it might create a stopping volume, or it might create just a low volume pushback, and then market might go up. Anything can happen right here. So this particular phase is called the selling climax, but it's not required that this has to be what you can say, it has to be a selling climax. No, that's not how things work. Selling climax can be a pattern. You can recognize it as a pattern, or you can recognize it as a phase. But the answer is right in front of you. What is climax, by the way? Climax means it's the ending of the trend. That's what the climax is all about, right? So now selling climax, market came down, the selling has been ended right here. So that's what the selling climax phase is all about. So once the selling climax phase is completed, the next phase is automatic rally right here. So what is the automatic rally? In simple, there are buyers out there who might be interesting. So obviously market is not like, simply market will go down like this. No, that's not how things market work. Market will create a swing every single time. So that's what it is, right? So every single time when there are sellers are present, buyers are also present at that particular prices, and market will go up for a correction. So this particular automatic rally right here is to check whether there are buyers or not. So if there are buyers or not, market will go up towards a particular level, and once it gets a confirmation saying that okay, fine, there are still buyers are not present at this particular point, and then automatic rally ends, and eventually market goes down. So that's the end of automatic rally. And once it is completed, what happens right here? The secondary test gets in. So what is the secondary test? Secondary test is nothing but after automatic rally. So they tested buyers right here. Okay, market came down, so there were no sellers, again came up, there are no buyers right here, and again market's coming down right here to test the selling climax levels right here. Okay, so if there is a high volume activity or anything like that, so if there is a high volume activity with a bar and so on, market might come down to these levels to test these particular levels. Okay, this entire levels can be tested. So that's how the selling climax levels can be tested in the name of secondary test. Okay, market comes back to secondary test to test whether there are sellers or buyers. So once the test has been completed, usually what happens is that this selling climax level will not be broken. Okay, if this is broken, it means what? It means that market is still continuing its trend. Now what happened right here? Now market came down, again came up, again came down, again came up. Again the same thing is happening right here. So let's assume this particular level has been broken. So again this is a simple phase. Again the selling climax will start after some point of time. But right here, if it hasn't been broken, it means that from this particular levels, once the test has been completed, once there is no supply that has been present in the market, once there is no supply out there, what happens? Demand enters the markets. Who's creating demand right here? Buyers are creating the demand right here. So obviously secondary test, once the secondary test has been completed, market goes up for a upthrust action phase. So this ends the phase A right here. Okay, phase A has been completed from the selling climax, automatic rally, and secondary test, right? So once this is completed, then market again goes up for a testing again and again. It keeps testing it. Okay, it wants to kick out all the weak orders right here, and there is most important point right here. Okay, that's something that you want to understand with the phases, but you have to understand, once you get a selling climax, this particular level becomes your support. And once you get an automatic rally levels right here, this particular line, the red line which you are watching right here, it becomes your resistance. Or in schematics, we say it is as a creek. So all the resistance in the schematic, we call it as a creek, C-R-E-E-K. okay, creek, and all the support in the schematics we will call it as ICE, okay, just like ice. Now, what is the phase B? Phase B is all about creating the cause. So what is creating a cause? So I hope you have learned the basics of Wyckoff schematics, where there are three major laws: law of supply versus demand, law of cause versus effect, and law of effort versus result. So if you understand what is cause is all about absorption, right? So it needs more power to push the markets towards the higher highs right here. So market is already in a downtrend right now. Market is exhausted, and the smart money is buying right here. They are slowly buying. They are checking whether there are sellers or if there are sellers, what happens? Let's assume the smart money is buying right here, and if there are sellers entering the market, what would happen? Smart money, the big players out there, they'll be in loss because market will go down from these levels, right? If the smart money is buying at this particular levels, right, if smart money is buying this particular levels, if the sellers are entering right here, what will happen? Market will go down from these levels and smart money will be in a loss, right? So they will not leave a chance right here. So what they're going to do, they're going to wait, they're going to absorb more and more orders so that they can push the markets towards the higher highs to make profits right here, right? So that's the phase B right here, which is mentioned as creating the cause. So they're going to observe right here. So right now, after the phase A, the secondary test is completed. It tested the selling climax. They checked whether there are no sellers right here. Again, buyers entered, and market pushes the levels towards the automatic rally, right? So these are the creek levels. As I told you, resistance, you can consider this as a resistance. Okay. So now, in simple, what happens right here? After secondary test, market will go up and it will test above the automatic rally right here. Okay, that's what the overall phase right here. So it will test above the automatic rally to check whether there are buyers or sellers right here. So what happens? Let's assume once market goes above these levels, and if the demand increases right here at this particular point, what will happen? Market will start creating a higher highs, it will go up. So after phase A, market is completely going up. But usually what happens, if the smart money wants to create a phase right here, if smart money wants to create a absorption phase right here, market will test above the automatic rally to check whether there are buyers right there. If there are no buyers, market will come back again and they will start creating the order. So they will make sure that particular price is within a particular range. Okay, so they're gonna create lot of absorption right here. So once the absorption phase is completed, so once the phase B is completed, we'll go to the phase C right here. But you have to realize one thing is, phase B is the longest phase in the market, right? So it's creating a cause. So sometimes we are, as swing traders, we are trading on 30-minute time frame or a 1 hour time frame, right? So we might be trading on a 30-minute time frame or a 1 hour time frame, right? So usually we'll be trading on a 30 minutes time frame and 1 hour time frame. Sometimes what happens is the smart money can hold a particular trend for more than 1 month actually. Okay, they can observe the orders for more than 1 month also. Sometimes they can observe the orders for 2 weeks, 1 week, and probably for 2 months also. It completely depends upon the schematics. So that's the reason. Smart money can hold for a very long time. So once they have completed the phase B, they'll start with the phase C right here. So what happens after the phase C right here? Phase C and phase D. Usually both are almost same. It is about testing for supply and demand and kicking out all the weak orders out there. So now they have created a cause right here. In phase B, they have already created the cause right here. So they have enough power to move the markets towards the higher highs right here. In the phase C and phase D, obviously they'll check whether there are sellers or not, and then suddenly you'll start creating a higher highs right here. So that's what the phase right here. So in this particular phase on upthrust action, what happened? They tested above the automatic rally to check whether there are buyers right there. There are no buyers, market came down right here again. So now in this particular phase, in a spring, in the phase C, they will try to test below the selling climax levels to test whether there are sellers out there. If there are sellers, market will go down from these levels, but no, they'll create a spring right here. What is a spring? I'll teach you with the practical example. You just have to understand. They'll come back again and they will test, and once they confirm there are no sellers out there, this is where market is ending, and now we can create a higher highs. So this is where we can try to buy the particular stock and we can make more and more points out of it. So this is where the smart money gets confirmed signals when it comes to trading Wyckoff accumulation schematic, and once it is done, they will start creating a higher highs from this particular levels. So once the phase C is completed, they'll start going for a test on the creek levels. So now there are two types of entries that can be possible right here. Once the spring has been occurred, this is one particular phase where you can actually enter a trade. Okay, this is one particular phase where you can actually enter a trade. So once it is done, you can enter a trade right here. Your first target after a phase C can be the creek levels. Okay, you can keep your stop loss below the spring. Okay, you can keep the stop loss below the spring. Your first entry will be here, and the first target will be the creek levels, the resistance levels as expected. Okay, so once that is done, you're gonna get a jump across the creek, the jack in a phase D. So what is jump across the creek? Jump across the creek is nothing but it's a breakout bar. Okay, you see in a price action, you see breakout candlestick and so on. You see a huge widespread bar out there with an ultra high volume, right? So those are the breakout bars right there. So once you get a breakout and you're gonna get a retracement, and that is where you're gonna take a trade. So what is a breakout and a retracement? In simple, you have to realize you're gonna get a break right here, right, with an increased volume. Market will come back again to these levels to test whether there are, again, a simple test. Again, smart money will test again for a supply and demand divergence and so on. So once that test has been completed, what happens? This phase is called back up to the edge of the creek. Okay, once the jack has been completed, the jump across the creek has been completed. This is called back up to the edge of the creek. So once this phase is also completed, this is the second and high probability phase. You're gonna take a trade in terms of swing trading. You'll be taking a trade around these particular levels, and you're gonna keep the stop loss below the breakout bar. Okay, let's assume the breakout bar is like this with a hard ultra high volume. You're gonna keep the stop loss right here. Simple. Okay, if it goes below this, then it means that market is still on a absorption phase, and you might get a breakout afterwards. But still, this particular entire phase is an accumulation phase. So that's the reason. Make sure your stop loss is too small compared to your targets. And by the way, please take a note that accumulation schematic trades which you're gonna take will be of high probability trades, and at the same time you're gonna capture more points compared to the normal intraday trading. I have seen 8 out of 1, 8:1 and 9:1 kind of trades. So if I'm risking, let's assume 1,000 rupees, I have gained 8,000 rupees profits just out of Wyckoff accumulation schematics. So these are the kind of overall Wyckoff schematic works up to phase D. So once the phase D is completed, phase E, the final phase. So what is the final phase? Defining a new trend. Okay, it will create a new trend from this particular phase. The absorption phase, every single thing. They kicked all the sellers out of the markets. They kicked all the weak holders out of the markets. All the absorption phases completed. They have enough power to create a new trend in the market. The smart money has enough power to create a new trend in the markets. So what happened right here? Obviously, market went up right here every single time. After the jump across the creek, sign of strength. Every single time you're going to get a sign of strength. Well, what is a sign of strength? In simple, you can say a no supply is a sign of strength. Okay, a no supply is a sign of strength. Or you might get other types of VSA sign of strength, which I'll be explaining in the upcoming days videos and so on. But you're gonna get different types of sign of strengths right there. So once it is done, again market will go up towards the higher highs and so on. So it'll create a new trend in the phase E, and that's how the trend actually continues right here. So this is the overall explanation from phase A to phase E of the Wyckoff accumulation schematics. Now let's get on with the practical part of the schematics. So this is one of the trade that I have personally taken in my particular trading days. This is something I wanted to show you to guys. So that's the reason I'm showing you. So first thing, this is HDFC Life of TradingView terminal, obviously HDFC Life insurance chart of 30-minute time frame. So when it comes to swing trading, I trade 30 minutes and 1 hour only usually, because we get more opportunities in this particular time frames. So as expected, you just have to compare with the chart right here. Okay, simple. Once you get a market in a downtrend, market came down. What is SOD? I already told you, shortening of drag. As you can see, the distance between the lower lows is getting reduced right here. So that's what the shortening of drag is all about. Okay, once the shortening of drag is completed, what happened? Selling climax phase. Okay, selling climax phase. It could be, I already told you, it is not just about a particular pattern. It's about the phase. Selling climax in the sense, market is stopping its trend. That's the final phase where market will not go below these particular points. That's what the selling climax phase is all about. So once the selling climax phase is completed, what happened? Automatic rally, market came back again, came down, tested the selling climax levels right here. So in simple, they have tested this particular level right here. Okay, they came back, they tested with the secondary test, and once the secondary test has been completed, they went back and tested the automatic rally above the automatic rally, and that's where starts the phase B and so on. Once the automatic rally is completed, upthrust action, okay, upthrust action is completed. Oh, sorry, I wanted to say upthrust, right? So upthrust action, they tested above the automatic rally, and once they get a confirmation that there are not enough buyers right there to push the markets towards the higher highs, there is not much of a volume right here, right? So what they're gonna do, they're gonna go through a absorption phase right here. So they're gonna go through the absorption phase right here. So I already told you phase B is the longest phase in the markets, right? So I already explained you phase B is the longest phase. They're gonna create a cause right here. So as expected, they're creating a cause right here, right? So they started holding. See, as you can see that you can compare the dates right here. From August, I think up to from August, it could be August 5 or August 6. From August 5 to August 23, they have literally held it for more than 15 days right here, right? So obviously more than 15 days they have started holding it, and once they had enough absorption right here, they came back and tested below the selling climax phase right here. So I told you spring. So what is a spring? Spring is nothing but, so I'll explain you in a simple diagram. So there is a particular support right here, and market will suddenly go back and it will push back. So that's what the spring is all about. Okay. So this is the spring. Market will go back. It will not create a cause right here. It will just touch below the selling climax level to check whether there are sellers out there. If there are sellers, what would have happened? Market would have created a downtrend right here. But no, since there were no sellers, that's the reason we got a spring and market went up right here, and you got a amazing trade up to jack. So one trade has been completed right here, and now the most importantly, the jack, the jump across the creek. So what is the jump across the creek? In simple, you have to realize this is your jump across the creek level, the breakout bar, which I told you. So this has a increased volume. So you can compare the volume of jack with all the volumes out there. This has the highest volume right here, right? Why is that? Because that's where the trend is being changed. It's defining a new trend. Okay. The phase E, I already told you. The phase E, what is the phase E? Defining a new trend. Right, it's gonna kick out all the weak holders out there, and it will push the markets towards the higher high. So they broke all the barriers out there, they went up. So once it is done, they started observing these levels. You didn't get a backup to the edge of the creek, but I took a trade around these particular levels. I kept on a higher highs, and market went up towards the higher highs right here. I kept my stop loss below the jack, and obviously you got a really good momentum towards the higher highs. From around like I bought around 688, and it went up to 750 and so on. So that was one of the trades which I have taken personally in my days. Now, one more particular schematic which I want to teach you. We will be talking only about the accumulation phase right here in this particular video. This particular schematic is also the same thing, just like I explained right here. But there are different scenarios in the market you have to understand, because market is not same. You can't just expect the same particular structure in the markets every single time. There might be different forms of phase A, phase B, different forms of testing in the market. So there are advanced things in schematics when it comes to VSA. But this is also one of the schematics, a new schematics is also one of the schematics which I found according to Wyckoff Schematic, Richard Wyckoff actually. So this is something I found in Indian markets. So that's something I'm going to show you right here. Same thing, what's happening right here. Once the trading range has been occurred, so obviously the selling climax, automatic rally, secondary test, you got the creek levels and the ice levels, and market went up, tested the creek levels, and market started holding these levels, and once jump across the creek, SOS, and market went up with these particular phases. So same thing has happened in Hindalco Industries. So this is Hindalco chart of 30-minute time frame of the trading view terminal. As you can see, same thing. Selling climax, you got a selling climax right here. Then automatic rally, obviously you got an automatic rally right here. Then secondary test. They tested the selling climax level right here, right? So obviously this has a high volume activity. Market came back, tested again for the supply and demand divergence, and once it got a confirmation, again market went back and tested the resistance levels, right? Creek levels, as you can call creek levels, the resistance levels. It tested back, And once it got a confirmation, see, market started holding those levels for a while right here. So that's what happened right here. Market started holding those levels. So the phase B was considered to be the absorption phase. So once it got completed, market tested back, market came down, and suddenly you got a jack that is called jump across the creek. That's what the jack is about. So what is a jack? You can see the increased volume right here. So jack has to be increased volume no matter what. Okay, every single time. The breakout which is happening at the breakout bar of the trading ranges, it has to be an increased volume. If it is a low volume, it means that it doesn't have any power. The market might reverse from those levels. So that's the problem. So you can see you didn't get a proper spread and proper volume right here, but this particular jack right here, it got a proper volume right here. So that's what it is. Jack has to be a widespread bar with a good more than average volume or a ultra high volume. Okay, so once you got a jack, you got a no supply and so on. So you didn't get a back up to the edge of the creek, but yes, this was a really good option to enter a trade. And obviously market went towards the higher highs, and even personally I had taken the trade in this particular chart also. So if you want to know what happened after this particular phase, this is what happened. From 433 rupees to 531 rupees. That's nearly 100 points, right? Not 100 points, more than 100 points actually. So I think I exited around these particular levels after seeing a huge higher highs, and at the same time there was a lot of weakness that was appearing in the markets, and I exited around 540 I guess. So anyways, so this is a chart right here. Okay, this is a chart, the same thing. What based on the schematic, I have drawn this particular levels and I observed it in the live markets, and I have taken the trade. Market went up. This was the jack was there. So this is where the jack was occurred, and this is where I have taken the trade. Market went up again, came back and tested the levels again. See how smart money is brutal. So market came back, tested again to create a false momentum for all the retailers out there to think that again the a selling phase has already been started. So they came back, they tested the levels. Once they got a confirmation, they started creating a higher highs, and see how much momentum they got right here. So this is the power of Wyckoff schematics, and I just explained the small part of it, and I hope you understood this particular example. If you have any questions, definitely you can ping me up in WhatsApp and so on. I'm definitely gonna explain you. I'll try to explain you. And there are a lot of things in the upcoming days which I'll be adding with the volume spread analysis complete series also, which I'm going to explain you. Okay, so I'm going to make one more video for volume spread analysis course announcement actually for all the people out there so who wants to learn VSA in a more effective way in terms of practically. So that's something I'm going to bring up. So stay tuned, and that's it for this video, and thank you so much. We'll see you in the next videos, and please like, share and subscribe as much as possible. If this channel grows, then only I can give you more and more quality content for you guys, and it's going to motivate me to make more videos for you guys, because I have a lot of things planned for this particular channel. Not only just volume spread analysis, I have a plan for swing traders, especially for volume profile, Elliott waves, order flow. There are a lot of things in the upcoming days which I'll be making videos just like this, so that it's easier for each and every one of you to understand. So that's one thing I wanted to put it out right there. And thank you so much. We'll see you in the next videos. Goodbye.